Good morning and welcome to GrainTV. My name's Cody Bills. This is Logan Burgess, the pride from the north. Today is November 17th. Corn in the overnight session was trading down 5 cents, beans down 3, and wheat down 4. Yesterday, the markets were roiled by global economic concerns. We saw Fitch come out and say that the U.S. banks are more susceptible to the EU crisis than originally thought.
Absolutely. You know, a couple weeks ago here, we saw this domestically with the MF Global collapse. They were highly leveraged in European debt, and I got to think that there are U.S. banks, U.S. investment banks in particular, that are more exposed to this crisis. We saw it start in Greece and moved over to Italy. Italy's Prime Minister, Silvio Berlusconi, has stepped down. Mario Monti is coming in. The Italian media in particular is calling this guy Super Mario, and they're going to need Super Mario to get out of this situation. As just this morning we saw in Spain, Spanish government debt yields are now approaching 7%. I got to think that this is an unsustainable level, and it's only going to help out the dollar moving forward. What are your thoughts on that?
Yeah, absolutely. Not only is the crisis going to help our dollar gain strength, that's obviously not good for grains. That ruins our competitiveness on the global market. But I think structurally the EU is going to have to stimulate their economy because I think the damage has been done. I think they're in a position where they're going to have to lower rates, which means our dollar will gain strength going forward. You know, in the words of Bob Seger, our grains are running against the wind.
Absolutely. Well, with that, let's take a quick break. We'll be right back to see how this is playing out on the board in Chicago.
Welcome back to GrainTV. Let's take a look at where grains are trading on the board this morning. Corn down 17, beans down 11, and wheat down 14. Take a look at the chart here. This is December corn, and we are now trickling out of that range that we've been trading in for quite some time. I've got to think that it has a lot to do with export sales this morning. Where did we stand?
Yeah, absolutely, Cody. Well, we saw export sales come out this morning, 280,000 tons, well below where the market was kind of expecting at 470,000 tons. With that said, we're still ahead of where we need to be to meet the USDA projections by 110 million bushels. The big question I have, China's already booked 3/4 of their projected import needs for the year. My question now is, are they going to be coming back to the table here?
Yeah, you know, I would say that you can't guarantee that they're going to be coming back to the table. I know a lot of analysts out there are saying that that China needs more corn, but there's 3 reasons why I'm a little skeptical. Number 1, I think they're having bilateral talks with Argentina. I think that's not going to help a U.S. corn demand here. 2, in the WASDE report, we saw their production actually increase 2.5 million tons. I think that's not going to be helpful. And 3, they're buying grain in other areas, like Ukraine we saw in weeks past. So bottom line here is I don't think you can guarantee that China's going to be back here. If we have a break in price, maybe so. But right now, I don't think so.
Absolutely. You know, we saw a lot of interest in U.S. corn when we were down in the $6 level in late September, early October. With that said, though, you know, I think that export figures moving forward are a big question. If I'm a producer right now, my power play for today is to be selling corn right off the combine. We had Kevin on the show last week talking about how harvest basis right now is the strongest that we've seen since 2007. You know, I'm selling it right off the combine, but with that said, is the cash market preempting a demand for corn that we haven't yet seen in the futures market? I want to be protected to the upside. Maybe now is a good time to buy a call. We've seen market volatility be relatively low. We've been trading sideways for the last 2 or 3 weeks. You know, that's a big factor in the premium that any producer is going to be paying to pick that call up. Now might be a good time to get on board. Bottom line, sell corn in the cash market right now. Pick up a call to protect the upside. Cody, moving over to soybeans. Soybeans a little bit of a different story. What are we seeing over there?
Yeah, I would say that right now export sales came out this morning. They were slightly better than expected. We saw 746,000 tons sold this morning relative to expectations of 600,000. So we were a little better than expected. People have been talking about China. We did see them in the market of 517,000 tons. That was, you know, that's good. That's supportive. But the bottom line, you can't lose track of the big picture. We're 54 million bushels behind where we need to be to meet export expectations. I just don't see this as a bullish scenario this morning. It might prop up a little bit, but not much. Bottom line here, I think that we're going to need to be aggressive hedgers right now. There's 4 reasons why I think we should be aggressive hedgers. Number 1, weak export sales, 54 million bushels behind. Number 2, we have the strong dollar, which is hurting our competitiveness on the global market, and I expect that trend to continue. Number 3, last week, we had the WASDE report come out, and the ending stocks actually went from what people expected, 180 million bushels, to 195. So we have more beans than we thought. And then we are weak technically. Take a look at the chart right here. You know, right now I'm seeing 1150 as a key support level. If we break that, I think there's a lot of reason why people will get stopped out. I think we're going to impulse lower if we go through that. And I think it gives more reason for funds to sell or to get on the short side. The bottom line here is that is a risk, and I want producers to protect themselves. What I think you should do in terms of my power play is to buy some puts to protect. You got to buy some puts to protect. I think in terms of the cash market, we have room for basis improvement, so I don't necessarily want to make cash sales yet. So, you know, there's a number of different ways you can protect yourselves with puts. There's a number of different strike prices. It all just has to do with how much you're trying to hedge. But, you know, give us a call at 877-GRAIN-07, and we'd be happy to walk you through and see what sort of strategies you need to put in place to protect yourself.
Absolutely. With that, I think that wraps up our show today. Have a good one.